Minimum wage workers get a big jump in pay. The regulator takes control of the national electricity market in an effort to avert blackouts, and consumer confidence hits its lowest level since the beginning of the pandemic. It's Thursday, the 16th of June, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Now, amid all the bad news, there is some good news. It's a Thursday.
You know what that means, Sean? It means
Safe Word
by Fear and Greed is out today, which is really, it's a bit of a highlight on our weekly calendar, really, isn't it?
Well, it kind of is. I mean, it's great fun making it because it's just you, myself and Adam Lang chatting about the world, really. Sometimes when I listen back, I do cringe somewhat. I'm slightly embarrassed by where we go and what I say and how we appear in that. However, that's probably when you're doing a podcast like Safe Word, you're putting yourself out there. And if you want to get to know what the three of us are like, listen to Safe Word.
Absolutely. And there is a bit of a business flavour to it.
Just a bit.
And often the link can be a little bit tenuous. But my favourite part of today's episode is your revelation about what you did to earn some extra money on the side when you were just starting out in journalism. And I won't spoil it here. If you want to find out what it was, search for Safe Word by Fear and Greed on your podcast platform. It comes out every Thursday. It is no longer available on a Sunday as part of the main Fear and Greed playlist. So if you want to hear Safe Word now, you have to go to Safe Word by Fear and Greed on your podcast platform and hit follow or subscribe. It is, of course, still entirely free. So why wouldn't you?
Why wouldn't you?
And then you get it every Thursday. Absolutely.
That's right.
But Sean, there is plenty happening beyond Safe Word. There's actually a world beyond Safe Word, believe it or not. And you've got a really interesting chat coming up today with Chris Breiche, the CEO of online investment advisor StockSpot, really quite broadly about what's going on in markets at the moment.
Yeah, perfect timing. We talk about what's happened in the last few days and what investors should be thinking about, and also about exchange-traded funds and the benefits of those.
But the main story this morning, Sean, the Fair Work Commission has handed down a 5.2% increase in the national minimum wage, or about $40 a week. It's the biggest rise since 2006. And as you'd probably expect when there's a rise of that kind of relative size, it's triggered both plaudits and condemnation.
Yes, it was a higher than expected increase, Michael, and is about in line with headline inflation. Fair Work Commissioner Ian Ross said the tribunal felt the need to protect the real value of wages of lowest paid workers. The Commission has also announced a 4.6% increase in the modern award minimum wage. Now, in dollar terms, the 5.2% increase takes the minimum wage to $21.38 an hour. That covers about 184,000 employees, or about 1.5% of the workforce. They're the people who are paid the absolute minimum amount. The 4.6% increase in the modern award minimum wage affects about 20% of the workforce, or about 2.5 million workers. They're the people covered under modern awards.
All right, so the big question, Sean, is when do people start getting paid more?
Well, the increase begins from the beginning of next month. Great news, unless you're in the aviation, tourism or hospitality sectors. The Fair Work Commission delayed that till October to help those sectors with cash flow needs, really.
Now, what does it mean for wages growth? And I suppose the kind of natural flow on from that is, can the economy afford it?
Well, it will add about 0.5 percentage point to wages. And according to AMP Australia, wages growth next year is likely to be about 3.75% by the middle of the year at least. That's getting some decent wage growth back into the system. Can the economy afford the increase is a much tougher question to answer. Some industries certainly can and others can't. Until the past couple of months, politicians, regulators and unions were all calling for a significant rise in the minimum wage to help the economy. The complicating factor now is that there's already plenty of inflation in the system, and this wage decision will certainly add to that. Put in the low and middle income tax refunds expected in coming months, there's plenty of fuel for inflation, and we already know prices are rising. Certainly the decision will add to the chances of higher interest rates down the track.
Sean, the Prime Minister, Anthony Albanese, must have been pretty happy with the decision because during the election campaign, he more or less said the Commission should give a 5.1% increase.
Yes, he was very happy. Mr. Albanese said the decision would make a difference to those people struggling on the minimum wage. The Australian Council of Social Services joined welfare groups in praising the decision, and the ACTU Secretary Sally McManus said she was really happy with the decision. On the other side of the coin, the Australian Retailers Association said the jump would tip some businesses over the edge. The Australian Industry Group warned that the decision is now a major risk in driving higher inflation and placing even more hardship on households and businesses. And the Australian Chamber of Commerce costed the decision at about $7.9 billion a year to businesses. So we had people very happy and people very unhappy.
All right. Now, Sean, after the massive sell-off on Tuesday on the ASX, how did the local market go yesterday?
Well, it was looking much better, but then there was a late afternoon sell-off and the S&P ASX 200 finished the day down 1.3% to 6,601 points. It's the lowest close this year, the fourth day in a row of negative returns, and about 80% of companies lost ground yesterday. The overriding sentiment is concern that sharply higher inflation will trigger much higher interest rates and potentially put the local economy into a severe slowdown or possibly a recession. The Fair Work Commission decision yesterday added to those concerns. All 12 categories of the index fell, led by tech, real estate, energy and healthcare. All the major banks went backwards, though Macquarie Group did okay. It was up slightly. The big miners were mixed. Fortescue ended up 0.3% after its big sell-off on Tuesday. James Hardie Industries and REA Group both closed down more than 6%. Xero was off 5.5%. Goodman, Cochlear, WiseTech Global all fell more than 4%. Mind you, a special shout out to Telstra, Michael. It ended the day 2.3% higher. Now, the Aussie dollar came off its lows yesterday, having at one point dropped to 68.5 US cents. Higher bond yields locally, better than expected industrial output figures in China, and the prospect of higher interest rates helped the local currency. It's currently trading around that 69 US cent mark.
All right, plenty happening today, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the Australian energy market operator yesterday took the unprecedented step of suspending the electricity spot market across all states with the exception of WA.
Yes, it said it was impossible to buy and sell electricity in the spot market in accordance with the rules. That's because of surging wholesale prices, the pickup in demand due to the cold snap we're experiencing, outages at power stations, and the reluctance of generators to produce energy that's uneconomical. The AEMO oversees the operation of the national electricity market and reliability of supply. It's now taken over that market to make sure the lights stay on in households and businesses. It can set prices for wholesale power, it takes control of all generation plants, and it can then force those generators to meet power demand. Chief Executive Daniel Westerman said it had no choice but to suspend the spot market to ensure secure and reliable supply of electricity. It is a very, very complex situation, but now the regulator is running the electricity market. That's kind of it in a nutshell. Energy Minister Chris Bowen yesterday repeated that he did not expect there to be any blackouts in any state, and he'd said he'd support any moves by the regulator to keep reliable power supply in the grid.
All right. Now, away from the minimum wage decision yesterday, Sean, there's been plenty going on in the world of economics over the past 36 or so hours.
Sure has. And of course, investors are trying to decipher what to make of it all. Let's start with the Reserve Bank Governor Philip Lowe's appearance on ABC TV on Tuesday evening. It is very unusual for him to give an interview on television. In fact, I can't remember him ever doing it, and I can't remember his predecessors ever doing it. So clearly the central bank is desperately trying to get its message out. Dr. Lowe said inflation would reach 7% this year, meaning the Reserve Bank needed to take decisive action. He said it was reasonable to expect the cash rate to reach 2.5% from its current level of 0.85%. For most of us, that means a standard variable mortgage rate somewhere beyond 6%. That's much higher than where it was just a couple of months ago. Economists actually expect the cash rate to jump 50 basis points next month when the Reserve Bank Board next meets.
And one I mentioned at the top of the show, Sean, consumer confidence, which has fallen now as the rate hikes kind of start to hit home.
Yeah, it's tumbled, really. According to the Westpac Melbourne Institute Index, confidence fell 4.5% this month. Now, that's 7 months in a row where confidence has gone backwards. It's now its lowest level since the beginning of the pandemic. Of course, that's really bad news because people who don't feel confident don't spend money, and that hurts economic growth. With all these interest rate rises coming on, higher energy prices, the cost of living rising, this all sort of becomes a self-fulfilling prophecy where people stop spending and the economy slows, and there is a real chance that we do end up in recession at some point in the next couple of years.
God, it's an extraordinary time at the moment, isn't it? There is just so much going on and so many different big issues all kind of colliding at once.
Yeah, that's exactly right. And some things like the war in Ukraine you could never have expected or planned for. Even inflation being quite as out of control as it is, no one really expected that to happen. It's quite an amazing moment in time for economists.
Yeah, it certainly is. Now, Australia and Japan, Sean, have agreed to elevate defence cooperation and step up joint military exercises to address the security situation in the Indo-Pacific.
Yes, the two countries called it a severe security situation on the back of concerns about China's increasing assertiveness in the region. Deputy Prime Minister and Defence Minister Richard Marles is in Tokyo. He met with his Japanese counterpart yesterday, and he said it was crucial that the two countries cooperate given the most complex strategic challenges we face since World War II.
Medical device maker ResMed has bid $1 billion for a German medical software company.
The group, Medifox Dan, will complement ResMed's US-based SaaS business and boost its existing activities in cloud-connected medical devices. Basically, it'll help patients, particularly around sleep apnea and other respiratory conditions. It's ResMed's third large acquisition in the software space and the largest to date. ResMed's share price fell a couple of % yesterday.
It was the second day of closing submissions from the Star Entertainment Group to the inquiry into whether it should hold a casino licence in New South Wales. And it seems like the gaming group is trying to tread the line. And it's quite a fine line, isn't it, between contrition and keeping its licence.
Yeah, it sure is. According to a report in the Financial Review, Star Entertainment has accepted it was inappropriate and unacceptable to withhold adverse KPMG reports about anti-money laundering controls at its casinos from regulators, but it rejected assertions that management's hostile reaction to the papers was symbolic of wider cultural issues. The gaming giant also said the review should not find senior officers attempted to conceal evidence of poor practices from watchdogs. It ascribed such actions instead to a misunderstanding of legal and professional privilege.
Now, Sean, I know you'll be happy about this next story because you have complained about the price of tomatoes, of lettuces, of pretty much everything. Woolworths says it will freeze prices of a bunch of everyday products such as flour, sugar, vinegar, laundry powder and nappies until the end of the year.
What I did like about this is the fact that vinegar apparently is an everyday item. Well, I don't think I've ever bought vinegar. I've bought it to actually clean stuff. Never use it though.
I love that is the point of this story that you pluck out and go, oh, vinegar.
Vinegar. Who uses that now?
That's worth a bit more attention, isn't it? No, it's probably not really, Sean.
Probably not. CEO Brad Banducci will tell customers that the trolley freeze prices are across both Woolworths branded products and branded goods. It comes after an outcry about rising food prices, with examples of iceberg lettuce costing $10 or more, triggering anger among shoppers and fear and greed presenters as well. Food prices have been hit by higher transport costs, poor growing conditions, including the floods down the East Coast, and higher global commodity prices, largely due to the war in Ukraine. Mr. Banducci said the average family spent more than $200 a week on groceries. I wish I only spent $200 a week on groceries.
What kind of an average family is that? I don't know anyone that would only spend $200 a week on groceries.
Well, one that has fewer children than you and I.
Oh, but it just inevitably just blows out, doesn't it? You can aim to spend $200 and then suddenly you've spent $500 and you go, how did that happen?
Yeah, I know. Exactly.
Anyway, enough about groceries. Let's move on to BP, and the petroleum giant has bought a chunk of the $52 billion Asian renewable energy hub in the Pilbara in WA.
Yes, this is a really big deal. It puts BP front and centre in bringing renewables and hydrogen projects to fruition. BP's taken a 40.5% stake in the hub and will become its operator from July 1. Now, this is the project which the Morrison government controversially blocked last year on environmental concerns. A revised proposal will now be submitted for the 6,500 square kilometre site in the East Pilbara, which has been billed as potentially one of the largest renewables and green hydrogen hubs in the world when it eventually gets up and running. That's slated for the end of the decade, and BP will be the main operator.
A few quick ones for you, Sean. Foreign Affairs Minister Penny Wong will visit the Solomon Islands.
It's the first meeting between Australia and the Solomons since the Pacific nations signed a security pact with China. That was during the election campaign and caused plenty of controversy.
Wouldn't that be a fascinating meeting to be a fly on the wall for?
Yeah.
The Australian Electoral Commission has rejected former New South Wales Minister Andrew Constance's request for a recount of the vote in the South Coast seat of Gilmore.
Yes, and that means the ALP will end up with 77 seats in the House of Representatives. Congratulations to the ALP for winning the election.
And just one more, Regional Express has rejigged its flight schedule, dropping some routes and picking up others.
That's right, it will drop about 6 marginal routes, including Sydney to Cooma in the Snowy Mountains, but expand services to 11 regional cities in New South Wales, Victoria and South Australia.
All right, now moving on to overseas news, and there was some mixed news yesterday out of the Chinese economy.
Industrial output rose 0.7% in May. That's good news because many of those factories support Australian commodity exports. But retail sales shrank by a very large 6.7% in May, notwithstanding some COVID restrictions were relaxed. It's a big fall, but not quite as big as expected. And in fact, some economists were quite happy that retail sales fell by under 7%.
Sean, can you believe that we're still talking about Brexit?
No.
This is still a story today. This has been going on for years and years, but the debate continues in Britain and Europe with the UK government proposing new legislation that would rewrite the rules for Northern Ireland.
Northern Ireland, the border between Northern and Southern Ireland has always been the most contentious points of debate. Now, the UK government wants to remove customs checks on some goods entering Northern Ireland from the rest of the UK, which would override parts of a trade treaty with the European Union. Boris Johnson's government says it's a genuinely exceptional situation, while members of Europe basically disagree. The point is there is free flow of traffic between North and South Ireland, or Northern and Southern Ireland. If this legislation is allowed, it means that goods will be able to go into Northern Ireland freely from the UK, and then they will be able to flow into Southern Ireland. So it is a real change that Boris Johnson's government's putting forward.
All right. Now, up next is the Fear and Greed Daily interview, and today you're speaking with Chris Breike from the online investment advisor StockSpot.
Yes, as we mentioned at the top of the show, very timely discussion given what's going on in financial markets right now.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 16th of June, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook. And don't forget to search for Safe Word by Fear and Greed wherever you listen to podcasts and hit follow or subscribe on the new episode that is out today. I'm Michael Thompson, and that was Fear and Greed. Have a great day.